What's happening with the global stock markets today? The murmur of anticipation is palpable as the globe's financial hubs hum with cautious trading. Investors, both seasoned and novice, are leaning forward in their chairs, their eyes glued to their screens. The world's stock markets are in a curious state of suspended animation, a collective holding of breath, as we wait for the Federal Reserve's decision. This is not just another day in the world of finance. Today, the stakes are high. The Federal Reserve's decision on interest rates could tip the scales in a significant way. The current quiet of the markets is not a lull, but the calm before a potential storm. Analysts, traders, and investors alike are hanging on every indicator, every hint of what might come. Now, the main focus is on the Federal Reserve's decision. Will they maintain current rates, or will they hint at potential rate cuts? These questions are not just floating around in the United States, but are echoing through financial corridors worldwide. At the heart of this anticipation is a simple economic principle. Lower rates can stimulate the economy, boost company profits, and potentially lead to higher stock prices. As the world watches, the stock markets hold their breath for the Federal Reserve's call. The spotlight now falls on the Federal Reserve. What will their decision be? The Fed's choice will shape the economic landscape, influencing everything from your savings account to the fortunes of global corporations. Here's the deal. If the Fed decides to cut interest rates, it typically means they're trying to stimulate the economy. Lower interest rates make it cheaper to borrow money, encouraging businesses to invest and consumers to spend. This, in turn, can lead to increased corporate profits and potentially higher stock prices. On the other hand, if the Fed opts to increase interest rates, they're usually aiming to slow down inflation. Higher interest rates make borrowing more expensive, which can cool off an overheated economy. However, this can also lead to lower corporate profits, which may cause stock prices to fall. It's also important to note that the Fed's decision doesn't just impact the US economy. Given the interconnectedness of global markets, a change in US interest rates can have ripple effects around the world, influencing everything from exchange rates to foreign investments. The implications of the Fed's decision will have far-reaching effects on global markets. No matter the outcome, the market's reaction will be telling. This simple truth is what keeps investors on their toes when the Federal Reserve makes its decisions. The market's response can provide valuable insights into investor sentiment, reflecting their collective predictions about future economic trends. If the Fed signals future rate cuts, we could see a market rally. Lower rates can stimulate the economy and boost company profits, leading to potentially higher stock prices. Such a move could spark investor optimism, driving a bullish market trend. This is what we've seen in recent stock market rallies, where the mere hint of rate cuts has led to a surge in stock prices. On the other hand, any indication of keeping rates steady or even raising them could dampen investor sentiment. Higher interest rates can slow economic growth by making borrowing more expensive. This could lead to a bearish market trend with potential drops in stock prices. It's a delicate balance, and the market's reaction to these decisions can tell us a lot about where investors think the economy is headed. In the end, the market's response to the Fed's decision could set the tone for the global economy in the near future.